Hey guys, it's Dana Graham here with LePage Alliance. I want to talk about deferring mortgage payments. So if you or your family's income has been affected by COVID-19, you may be thinking about deferring a mortgage payment because that is likely your largest payment every month. Firstly, if you're thinking about doing this, talk to your mortgage advisor. If you don't have a mortgage advisor, or it's been a while, if your mortgage advisor is no longer in the field, please reach out to me and I can hook you up with somebody at your institution where you have your mortgage, and they'll have the most information about each institution's rules and regulations about deferring a mortgage. This is just a general overview. Every institution is going to have different rules. Once you reach out to your mortgage advisor, they'll ask you a few questions. I don't know the different qualifications at each place, so make sure that you do qualify for a deferred mortgage. You'll need to plan ahead. So if your mortgage payments come out on the first of the month, you'll need to reach out to somebody or at least start the discussion 2 weeks before that. If it's within a week or 5 days of your mortgage payment, they may not be able to skip that one. It may have to be the next mortgage payment that they skip. So plan ahead and make sure that you're skipping the correct payment or the payment that you want to skip. There is no fee to skip a mortgage payment, but that does not mean it doesn't cost you money. So this is essentially how it works. With every mortgage payment that you have, part of it goes to your principal and part of it your principal loan amount. So that's the actual amount of your loan, and it decreases the balance of your mortgage loan. Part of that payment is interest. So every payment that you have is like this, and it depends where you are at in your mortgage, how much that interest is versus the principal amount. So if you're at the very beginning of your mortgage, your interest payments will be higher, and if you're nearing the end of it, your interest payments will be lower. So what happens when you defer a payment is that interest portion of your payment gets added on to your total mortgage amount. So it increases the amount of your mortgage, and then you'll be paying interest on top of that new amount. So you'll be, once your payments start up again, your payments won't necessarily increase, but you will be paying more interest over time. So there are calculators online that will tell you how much deferring one payment will be over the entire length of your mortgage. So make sure you check that out. I know RBC has one online, and it's definitely interesting to check out. If you're doing double up payments on your mortgage anyway, you can bring those down to one payment, or you can skip the same amount of payments that you've doubled up for the year. Also good to note that if you're on the TIP program, which means your property taxes and your mortgage payments are combined into one payment, you still are responsible for paying your property taxes each month. So deferring a mortgage payment does not defer a property tax payment. If you have any more questions, please reach out to a mortgage specialist or reach out to me and I can hook you up with somebody. Thanks for watching and stay safe.